What's up, guys? Good morning. I am sorry that I'm late. I took a little vacation from trading, as I should. Whenever you go on to a nice winning streak, it's pretty nice just to take some time off just to reset your mind and get it back to trading equilibrium. That is very important as a trader so that you do not create biases inside of your trading. And most importantly, you can come in with a clear mind, which is the most important thing while trading. One moment here while I go ahead and share the stream. Damn. Let me pull it up a different way. As always, I have the worst allergies in the morning. I do not know how to fix that just of right now. That's so weird. It's not showing me that I have a Alright, so the markets are right now trading pretty sideways. This is why sometimes I don't like to take trades, and the reason for it is just very simple. When you start to trade the markets in a sideways market and that's not your trading strategy, essentially what ends up happening is you start to make bad trades. You start giving back money to the markets, which is not the overall idea when we are making the most out of our trades. So we try to stay away from that. Essentially what ends up happening is you start to make bad trades. So to avoid bad trades, like I said, we just take days off. Showing up every single day is part of the markets, but understanding when and where to make a trade is the second half of the battle that we all want to be right in, right? I mean, that's going to be our saving grace for majority of here we go. Okay, now that we have that sent out, everything is very good. Let's go back to the markets. All right, so we have our visualization for today of what are our best entry points in the market today. We talked about the sideways market and why it's not the best markets to trade. If you look for the past 3 days, 1, 2, 3, 4, we've had a range bound trading where it's simply making low points of high and lows and diving down into the deeper levels of support back to resistance inside of a range. What a range essentially makes is 2 points of support and resistance that are hard points of price that refuses to break out further. A lot of traders make money in these markets, right? There are millions and millions and millions of traders out there. So when you look at the markets in relative terms to what you make money on, right? That's what we call a strategy. Now, for example, one of my most profitable strategies inside of the market is shorting cryptocurrencies. Contrary belief, I make more money shorting the cryptocurrency markets than I do going long. And the reason for that is because I've developed a proper strategy that involves coins that have run up more than 50% in the past, let's say 7 days, 14 days. I look at that through coin market cap. It's a very simple process. and then I go to my brokerage and I short the coin. So I filter through 7 days. I column the filters through BitUnix. Right? I apply the change, and then I go and I look to see which coins would be most applicable to short. For example, helium, right? Then we go to this, right? We go to the futures market. Perfect. Then we go to helium. As you can see, my spot portfolio is pretty red right now. Not shocking, to be honest with you. Cryptocurrencies are going lower. I'm probably getting ready to buy some more of those. I'll back myself by just buying more. Honestly, that's the only way that you can dollar cost average your way out of some situations. For me, I'm just waiting until there's a better looking market or a better looking chart to dollar cost average. But you've heard my strategies. You buy a little bit each and every time. This is a trading account that I use just for shorting and doing some of my test trades. So it really doesn't matter what happens to this money. All right. Where is this? Meme coins, I guess. Helium. It doesn't have it on there. HNT. Okay. All coins. I guess I removed it, which is weird because that is their order books. I'm curious. There's another coin here that I do want to take a look at because I did get 2 bad entries on. This is why I haven't been trading a lot of crypto, because of that right there. So check that out, right? We had a retracement on Pippin. It reached all the way up to 75 cents, right? The short was there, but where was the short in terms of the Fibonacci sequence? Let's take a look. It was a complete one-to-one retracement. So that means that it retested the previous highs at 75 cents before a short was applicable, right? This happens inside of the market. This is why you shouldn't quit shorting. To be honest with you, I had to step away because I made 2 bad trades here, right? I could have made money on this short here, and I could have taken my profits back down at 42 cents. I stayed in the trade because I got stopped out at the next Fibonacci level. For me, I take 2 trades. If it's not within my trading strategy, I take a break and a rest. I didn't come back to this because I didn't set my alerts on TradingView. If I would have set my alerts on TradingView, the proper alert for me would have been to a 1-to-1 ratio. That would have been the best place to take shorts. As you notice here, right, I talk about it all the time in my previous videos. That was a 40% short. 50 bucks there would have done numbers. We can take a look at what that short would have taken. That short would have profited at 50 bucks inside of the trade with the right leverage. So let's say we used $50 leverage. Our take profit was 45 cents. That would have been a 100% or a 10% return on the markets. So you can see here, it's actually 11%. You can see here how profitable this strategy is. So that would have made up for this loss here. That would have made up for this loss here. By just continuing to not quit inside of the market, right? I also could have taken a short here. You don't see it, but if you go down into the lower time frames, it's there. We touched this level. We came down level 2 level. I have not touched this chart. Like, I come back to it all the time with you guys because I want to prove my strategy to you, right? And my strategy is a very simple one at the end of the day. I make a Fibonacci sequence or a Fibonacci extension to retracement from the top point of the last charted high on the hourly time frame, the 4-hour time frame. You can see it here. So from 75 cents at the last charted high, I simply just took the last charted high to the last charted low on the markets before we had a small retracement. Now, typically what you can use is a trend line to dictate what is trend, and in this case, it is trading downwards. It came down and bounced and retested newer highs, but never higher than the last high that we had, which was 75 cents. For example, this was 75 cents, this was 50 cents, this was 54 cents. So it traded within inside of a declining range, right? Or what we formerly known as a regression trend. That gave me the indication that this is a perfect coin to short. Now, here, check this out. You can even drag this down further, and it's not really going to impact the levels that much. In fact, it's probably going to give you more accuracy when it comes to the entry and the exit points. Now, if I would have charted it correctly, right, because we had this trading data and I had it pulled up all the way to here when I took my shorts, you can see how faulty my entry points were, except for when it came from here. This was a good entry. I could have taken the short and I could have had profit here, but the only problem is that I got stopped out on the last wick. Check that out, right? So I got in here, I got out here because it broke this level. And what do I have as my rule set for anything that I trade? It's a candle wick close above the nearest level. I try to avoid tremendous losses on accounts by simply just doing this strategy is a candle wick close above the nearest level to prevent my account balance from going negative into the point where I can't recuperate any of the funds back. So what's the next move here? Well, what I would probably be looking for inside of this short, again, is another retest of at least this level right here. So what I can do is I can set an alert, but you know what we'll do? We're going to set an alert on TradingView. Why, Armand? Well, we're going to set it on TradingView because then when it actually does, the trade actually does, I do hear it, it's going to be on a chart that this thing is loud as shit. So there's no way in hell I'm going to miss when this thing goes off the next time, right? So let's chart it to the last high. This one's a little bit cleaner because it doesn't have the filled gap inside of here, right? And you can do this. You can have a list of cryptocurrencies inside of TradingView, short when ripe. That's my trading strategy. I kind of look to see which ones are green. I go into those cryptocurrencies, I chart something like this, and then I simply just make an alert like this. Now, if I wanted to test a strategy, right? This is why trading strategies are so important in the markets. What I can do is I can set a sell order, paper trading. Now I have this open. Let's say I want to short 100,000 of this coin, and I set it at that level. Oh shit! Well, that entered a little bit late, a little bit early. I wanted to enter it right here. It's okay. What we're gonna do is we're gonna stay true to the entry. I'm gonna close this because it doesn't matter. Okay, so that's a faulty trade. So we'll just take the $17. I want to short it up here. I don't really want to watch it, but I will set a sell limit or a sell better order, and that's it. We move on from the situation. Take a look at some of the news. Gold, silver is coming back up. I don't think that we'll see it at those highs anytime soon for now. This guy's a retard. Excuse my language, but he's so stupid. If this escalates, US on the brink of war with Iran, maybe commodities will start to shoot up a little bit, but I don't see that happening because honestly, and I hate to say it for Iran, we would obliterate Iran. We have weapons like people have not ever seen before. Like my wife, she worked for a defense contracting company, and there are crazy weapons out there that you guys have never even thought about, that you guys have never even imagined in your wildest dreams. Then they are available to the United States military. It would cause destruction of cities in matters of seconds. So I don't think that a country like that would rival at any point our military in any branch. All right. So with that being said, I know sometimes what I say is a little far fetched, but trust me when I'm saying that's not far fetched. We are above every one of the EMAs today, so that would be indicate of a bullish price action. I like it. We're actually above a level. Let's go ahead and take this trade on NASDAQ, right? When we pull back into the zone over here, I'm going to set a buy limit order, which just executed, 5 contracts. I'm going to be shooting level to level here with a candle wick close below the level. So let's see where that gets us today. Now, I want to talk to you guys a little bit about prop firm accounts, right? A lot of you guys actually don't trade with your own money. And I'm going to grace you with some pieces of advice that could be very valuable to you guys, considering I've been using prop firms for quite a while. Now, a prop firm is essentially a tool we use inside of the markets to use other people's money to trade. There are many different prop firms out there. Some prop firms want you to show your skills by making X amount of money. Once you make X amount of money, they give you an evaluation account. An evaluation account after a demo account is essentially a simulated funded account where you're going to have to make another buffer, right? We call this the safety net inside of your trading account before you receive a payout. Some other ones you pay a little bit more and you can avoid doing something like that, right? And what I've learned is if you're in a 50K funded account, right, to keep this a TLDR, because I don't like to talk too much about things. My wife says I need to shorten my conversations with people so that they don't get bored. If you have a 50K account, try a position sizing between 1 to 3 positions only. If you do something like that, you're going to see that you have 12 chances in the market to make money. And ultimately, as a new trader, that's a very valuable source of a very valuable tool for you, because when you don't have $50,000 to trade and somebody's going to give you $50,000, like, check that out, right? We just got into that trade. It's already $400. I walked you guys through the trade by saying we're above our EMAs. The tech stocks right now are all coming up. We have 1, 2, 3, 4, 5, 6, 7 tech stocks that are moving up right now. Did I do anything special to indicate, hey, like, this is going to be going up? No, I just simply followed my strategy, right? It took me literally 5 seconds to follow my strategy as well. We're still coming up. There's no reason whatsoever to exit this trade. We are at $500 in profit in the first the first hour of the market. I did not start the market right at 9:30, so that should show you guys another piece of very valuable information in this game. You do not need to make a trade in the first 5 minutes of the market to make money. Oftentimes, you're going to get wicked out because you guys are trying to force a trade. I didn't force the trade here. I just read the charts. I said we're trading in a sideways market. This was an important moment for the market because now we're breaking out. What we call this inside of my mentorship with my mentor is this is a knock boom. It knocked again, and then the candle came in and boomed right over that resistance level. This green candle right now is evident of bullish price action inside of the market that is pushing price further and further to the the 25,155 level. Now, a smart trader, just to walk you guys through this, and then we'll go back to proprietary firms, is now you're going to take some of your profit, right? So now watch, I take 3 contracts off of the market, I deleverage myself, I set my stop loss at break even, or what I do is I set it at the previous high of the candle. The close of this candle over here was under the level, but I don't want to lose money here. A more aggressive trader, maybe he'll set it a couple of dollars above the stop or the entry point so that he has a small chance that if this does retrace back into the zone, which does happen very often inside of the markets, is what we'll do is we'll shoot up, right? A candle wick will form in terms of, here, I'll show you guys so you understand. I know there's a candlestick function here. Where is it? Where is it? Where is it? Okay. No, that's not really what I wanted to use. I thought it would be a little bit different. I wonder why they don't have candles, or if they do have candles, right? Why it's not displayed under this. Okay. Pathing, here it is. So what ends up happening sometimes in the market, right, is we have a breakout like this, right? The breakout is often met by traders getting impatient, right? And what it does is it comes back and retests a level, right? For example, this level is set at $24,791 right now, or $24,982. We come back down into the level and retest this zone. Resistance gets flipped to support, right? And that is where traders will have firm confirmation to stack and scale into a trade. I'm not telling you to scale, right? But this is a common, I wish I knew this. I swear, I wish I knew this. I wish somebody taught me this in my early years of trading, because it would have saved me so much time and money, right? We come back and retest to come back further up with a stronger level of confidence. This is what we know as a break and retest in the market. It's a very simple strategy, right? We don't enter on the FOMO candle, we enter on the retest of the resistance that now is flipped to a support, right? That is valuable information that you guys can put inside of your strategy. It does not happen all of the time, but it gives you a higher level of confidence when making a trade, because what you don't want to happen is something like this, okay? I see way too many people, including myself, have made mistakes entering a trade because it broke a level that was an important and key level, then retraced on me underneath and closing the level, and then that win that a small win that happened in a matter of 5 or 10 seconds then turned into a loss because of being impatient. Nothing ever good happens to traders who are impatient. Now, in this case and scenario, that trade on the left where the circle is would have not been a good place to go long. Why? Because that is what we formally know as a dead cat bounce. You can see it coming from the lower level of 24,645. It bounces in a relief bounce for traders to get caught in what we think is a reversal trade, but then is dragged down to new level of lows. Because what we did was we tested this 24,971 area but ultimately made a bottom low in the markets of 24,207 or 470, right? This is complicated stuff. This is what's going to take years for people to master inside of the markets before they can start to accept the reality that they're not perfect. Trading is not perfect. No chart is ever going to give you perfect entries and exits. But what it is going to teach you is what I just taught you right there. Why was it so important that we deleveraged that trade? Well, it's very simple, right? I love these regression trends, right? They teach me a lot of information about the markets. So as you can see here, we kind of broke out of that regression trend. But if you really looked at the market, the line should be down here. They make it automatically for us. So sometimes what I do is I stay away from that regression trend and I just use my own parallel trend, right, to mark down 2 points of the market, which would look something like this. Boom. Makes sense? That also comes from a high level of experience inside this market. You can clearly see the regression trend. We're coming down inside of the market. We're touching 2 points on the lower support that keeps declining, right? There's no coincidence in my mind that those two levels have touched on that line, specifically like the two levels that touch on the green line. As you can see in mathematics, we have what we call a mean, right? That is the center line, the dashed line that goes through all of those trading patterns. A smart trader in this market would have used a tool like this to analyze and make the best trade possible. Now, what did I say, right? Why we're not tracing that candle or chasing that candle? What ended up happening is we lost a little bit of steam. Did we lose completely? No. But what it did was it came back down and retested that 9 EMA. Remember, 9 EMAs are very, very strong on the 1 minute. Often it drives along the 9 EMA on the lower time frames to show you trend. Trend here is above the VWAP. If it's above the VWAP, where is price heading? That's right, it's heading up. Right? Because anything above the volume weighted average price is bullish price action. Anything above the 20 and the 9 EMA on the 5 minute indicates bullish price action, especially with Heikin-Ashi candles. This is an important lesson for everybody to learn as well, right? So now we have two likewise candles, but this candle is losing steam as of the moment. We have 34 seconds before the candle closes. Why is that important? Each candle that represents a 5-minute time frame should be preceding the next candle. So in my mind, as a perfect trader, right, who wants to preserve capital as best as they can, well, another part of me says, well, why don't we just exit one more position? I like to think that my $700 day or my $600 day in the first hour of my work, which takes most people to make all day, right, would be safeguarded by me because I'm not an egotistical, greedy, gluttonous bastard, right? So what do? I maybe sell another position. It's simple. My mentor said it to me the other day. Sometimes I don't get it and I have to repeat it to myself multiple times. Just hit sell. He literally coined that phrase. I cannot tell you further or more or better than just hit sell. Lose that ego. The ego does nothing for you. What it's going to end up doing is it's going to cause you so much pain inside of these markets. And this chart, what I told you here, it happens more often than not that we go and retest that now found support level because the close of this candle is an hour. 15 minutes, we just opened above the previous candle, but that does not mean that this candle is going to show continuation. We then go and look over to the confluence inside of the tech stocks to make sure that continuation is in the cards. Right now, we're not seeing the volume being pushed inside of the markets where, for example, here we had a large period of volume. What time is it? It's 10:16 in the United States markets right now. So at 10:16, what ends up happening is now we're an hour into the markets. The froth window where all of the trades are being backed onto the order books are starting to die down. The trades have already been taken. That's what we call the golden period inside of the markets. Do we force trades outside of the golden period? No, because what it's going to end up doing for us is we're going to make bad decisions and lose money inside of the markets. Now, in my account, right, on my test account for TradingView, I told you guys in previous videos, it's really important that you go and you make these test accounts for your own sanity, right? You make these accounts for 30 days to test strategies. You can do this your whole life. And look, we had continuation, right? There was no reason for me to exit the trade completely because now I have one contract that's going to be a winner here. What I can do now is I can set the stop loss a little bit higher. I change the stop loss, obviously, to the amount of contracts that I have. Sometimes I exit out of that position. I'll exit out of this position and drag. There we go. Drag the new price stop loss to the new base low in between these two levels. I'm not constantly micromanaging this position, but I'm ensuring that the gains that I did have for this day, which let's take a look. So we had 456 and 136. So that's 32 plus 30, that's 62, right? 562. So I made $562 with $188, $190 still in the market, right? So that's close to $600, $700 right now, $730 I think, or $720 inside of the market in the first hour. If I did the math on that, that's $700. One second. Okay, sorry, I just need to update something to make clarification. All right, so this is why it's important to test our strategies inside of the market. I didn't make any special sauce. I didn't do anything other than just read the markets, and there was a great opportunity that presented ourselves, and we took the trade knowing that we were a candle wick close below that level, right? So if we would have gotten stopped out there, it didn't mean the end of the world for us. We would have just had to come back, set a new strategy for us, and then go back inside of the trading decks, so that we had a very clear understanding of where the markets were going. We knew, right, on the 15 minute that the markets we're trading in sideways chop. This indication of a test at this level right here and a level right here was what we know at least in my mentorship as a knock boom strategy. It knocked twice on resistance. The second candle came back and retraced a lower support level, and inside of the 9:30 candle this morning, the 9:30 candle this morning, we had news that dropped earlier this morning. CPI data for the markets in Great Britain, durable goods order, core durable goods month over month, durable goods orders month over month. I don't think that has a huge impact on the markets, but what does have a really large impact is the FOMC Fed meeting that's going to be held place at 1 o'clock my time, 2 p.m. Eastern Standard Time. Right? So maybe what the price action is doing is it's pricing in those meetings, because obviously we know that Wall Street has insider information. Oh my God, shocker. No, I mean, this is actual news that we need to be talking about. Wall Street has insider information, so it's possible that they're pricing in price action that we don't know yet as retail traders. So that's basically my spiel today on education inside of M&Q. Now, let's go back to prop firms, right? So we talk a little bit about prop firms inside of the market, and although I'm not going to recommend to you guys a prop firm, it's really recommended that you do your own research here. Now, my mentorship, we talk about this all the time. Where do we put in our capital? How much of our capital do we put inside of these trades? Because the truth is when you use other people's money, right, it is dangerous because they expect you to follow the rules with their money, right? Often we don't want to follow the rules with our own money, and that's okay. When it comes to our own cash, we can deploy it exactly how we want, when we want it, and how long we want to keep it there, right? But for other people's money, typically what they do is a drawdown period. Now, if you have an account that has $50,000 in it, right? Typically, they're going to ask you for a profit target of $3,000. Your drawdown is going to be $2,000. Seems simple enough, right? Now, this is easier said than done because they add things like consistency rules, right? Like your daily profit cannot exceed X amount of dollars, right? Then you have a trading date or a trading window. You must trade for 5 days. Right? Now, why this is important is because we already have 4 rules right there that I just set for a $50,000 account to be inside of your name. So before you start to take money out of this account, right, you need to follow these rules: a profit target of $300, a drawdown that you cannot go $2,000 in one trade, a consistency rule where you cannot exceed X amount of profit in one day, and a trading window where you must trade for at least 5 days before they decide that you are a consistent enough trader to receive this account. Why is this important? Well, because usually these accounts cost you like $99 for $50,000 of capital. Now, inside of this trading strategy, typically what you want to do in an account size like this is use 1 to 3 contracts. If you're using 1 to 3 contracts, it gives you almost 12 tries to hit that $3,000 take profit in 30 days. That's really important because the pros are going to be you can take consistent payouts. And this could be another source of income for you. Right? And it's not really that hard because if you consider, like, I don't need the whole pie, I just need a slice every day. We made $700 today trading 5 contracts. That would have been $2,300 left inside of 30 days that I can make to make $3,000 and hit this overall goal before I get funded an account that has $50,000 in it. If you're doing really well and you make $300 a day, right? That's the equivalent of $6,000 extra a month. Think about all the things that you can do and all of the bills that you can pay with $6,000 extra a month, right? By just taking a profitable strategy and backing yourself inside of that strategy with somebody else's money. Remember, we're still in this trade right now, right? There's no reason for us to get out. It's pretty simple and to set a stop loss that stays, and you can get up, go, and do something completely different with your life. We've already made a pretty decent amount of money. For anybody that's working a 9-to-5 job, we bought our time back, and now you can get up and spend the rest of your day doing what you want. You guys should consider looking into these prop firms because essentially you can trade things like micro NASDAQ, you can trade Mez, you can trade micro gold, and creating a secondary source of income for you guys that is ultimately going to make you money in the long run. Seeing that we took our trade today, it was successful. I'm really happy that I was able to get that on the live today because this is what I love doing. I woke up today, I got onto the live, I saw the markets. I did not need to make a trade at 9:30. I talked to you guys a little bit about what the markets are doing and how to conquer a profitable trading strategy. I talked to you guys a little bit about a meme trading strategy that I do in cryptocurrency, and I talked to you guys a little bit about proprietary firms and how to use other people's money to make money ultimately in this game. So I'll see you guys tomorrow for another episode of a market breakdown, showing you guys and teaching you guys ultimately how to be consistent, profitable traders. I really appreciate everybody that showed up to class today. And if you guys have any questions, please leave it in the comments below. I'll see you guys later.